Hello and welcome to another video. If you're new to my channel, my name is Meydan. I'm a finance professional and also the founder of an innovative fintech for timing the future swing days and the hours in that swing day, including the market pricing as well, all in advance. So this video, for those of you who are new and for those of you who are veteran traders, this is going to be important. These are the traits of successful traders. Now, I've done a mini-series, a 10 video mini-series covering all the problems that traders have. And in this video, I wanted to make just one video on the most beneficial traits, the most, things they have in common. The best traders had in common these 6 things according to research. So let's take a look at them and move forward. The first one is good traders think fast, good investors think deep. So in any case, we've got to do a bit of thinking, all right, when trading. So successful traders, if they're trading, if they're day trading, intraday trading, scalping, whatever they're doing, successful trader means I'm consistently making money. So this means I have to think about how my setup is going to happen and is going to be carried out by me. So there I have to do thinking. What's the setup? How's that setup coming along in the market? Do I have the correct setup? If so, does it match my money management? Is the risk worth the return? Is it worth me taking this trade? So these are things, if that you're day trading, you're going to have to think quickly. And if you're also trading fast, you're going to have to make sure your money management is on top so that you don't lose money or take trades that are unnecessary. Obviously, investors, they're doing deeper thinking. Why? Because they want to evaluate the asset, the future of the company, maybe the share, the stock, and they constantly need to go back to it and evaluate it because companies change. For example, Tesla was going up and up and up, and as you know, since Elon's involvement in the government is going down, down and down. So whoever sold those stocks at the top, like Bill Gates did, right, and Elon was complaining about it, why did he sell my stock? Well, now obviously you know who's the smarter guy, right? So he sold the top and Tesla's been going down since the elections. So having said that, thinking is a part of the way you trade. You've got to put thought into it so that you can come up with a plan, wait for the setup and move forward. So these are really important stuff. Also one more thing that was in this trait was focus. Both of them, whether they were thinking quick or the deep thinking, they were both focused. Very focused on what they were trading, very focused on the analysis, and accordingly taking the trade. Okay, so in the 21st century, we have a lot of focus problems. We're distracted by a lot of things, including our phones, family, colleagues, whatever. Life is a distraction when you're doing any job. Also in the 21st century, we experience a lot of ADHD. People are very reactive and impulsive in terms of behavior. So obviously these are things we need to fix up, which are mentioned in the 10 video mini-series Trading Problems. So how can we fix this? Okay, how can thinking fast and deep, how can we approach this from a time and price perspective? Well, first of all, I don't like to think fast, but I don't like to invest in something for years and years, all right? So I like to take my time. This is why for everything I do, I've got a step-by-step procedure, 5 steps to analyzing the market, 5 steps in my trading rules, 5 steps in in the flow, in evaluating the market and so on. So for me, a checklist kind of thing is the way to go, because then I don't go out of my framework and I'm constantly going over the same things. So even if I do get disturbed or something happens, I can go back to that checklist. And this is also why I've also done for the Global Trader.club members who trade with time and price a trading journal, which you can also find on Amazon as well. Right? So planning ahead of time, the setup is very important. If we know the swing days in advance, if I know the trading hours of that day in advance. That is really helpful because I'm not stuck sitting in front of the screen being tired and bored and getting impulsive and impatient. So patience is a major problem. Not a lot of people have it. And if you're stuck in front of your screen waiting for some setup to happen, you're just going to wear yourself out. So in order to keep your focus and your thinking faculties intact, timing and pricing in advance can be very helpful. Let's go to the second topic. Now, the other thing they had in common was originality and creativity. They all looked at the same charts. Everybody is available, has access basically to all the data on the planet, but the way they use them is different. So this was really interesting as well. They're all looking at the same stuff. They all have data available, but they're creative in the way they look at things or the way they use data and information differently. Some use weather patterns, some use, I don't know, some use, for example, the number of traveling around the world. So the more people travel, the more luxury items they buy, they can forecast the future of the market a bit better according to that. So different kinds of information seemingly irrelevant to a stock may actually be kind of important for the whole, like economic vibe or, where it's going to. So using information, a bit creatively is another important thing, and this is why time and price trading, I think, is very creative as well. We're the only company in the world that's kind of calculating, as a fintech company, calculating the future swing days, breakout days, the hours to trade, with a targeting model for any time frame, with a price model, a target model for any asset that you're trading. So that's also one more thing. The third one is learning from mentors. Now, all of the best traders in the world had this quality. They all learned from mentors. Now, if you also mentioned it here as well, if you worked at any trading desk anywhere, a brokerage company, I've actually consulted and worked in a few Forex brokerage companies myself in the past. And what they do is they always put you next to a guy who knows what he's doing. What is that? That's mentorship. In any business, in any job, in any career, in any kind of dealing, venture, sports, craftsmanship, you're going to need to learn from someone. And I did so as well. And not just on one occasion, but on several occasions. When I started trading as well in 2005, I started with a mentor. I did not jump into the market trying to buy and sell stuff. No, I first got an education with a mentor, trading, analyzing the market together, seeing where I could improve myself, what to look out for. These things you get with experience, and this is why that also 10 video mini-series covers pretty much everything I've been through. And don't forget to watch the last one. That's the best one. So learning from markets, analyzing the market, also looking out for the important things, getting their experience, hands-on experience is gold. Let's take a look at the fourth one. Now, emotional resilience. This is also a common characteristic of the best traders. Now, a lot of people, when we talk about emotional resilience, people talk about controlling emotions. We don't go with that. I don't go with that. And I haven't seen my mentors actually go with that either. They say, listen, when you're losing, when the market's crashing, when something unexpected is happening, we get emotional. There is no control on your emotion. The only thing you can really do is calculate beforehand the point where you understand you're wrong and get out. Okay, and you have to accept in life that you're going to have bad days. In life, we accept we have bad periods. Why don't you accept it in trading as well? Because the way I've been mentored into it was listen, treat your trading like you treat your life. You're going to have a good day. You're going to have a bad day. Okay, in life you have good days, bad days. When trading, you're going to have good days, bad days. Accept it. In life, you try to minimize your damage by building a good environment around yourself, having good friends, supportive family around you. This is how you compensate and cushion your falls in life. So that's what you got to do with your trading as well. In order to kind of like emotionally be strong, you have to have a good environment around you, and you have to have a plan, and you have to understand that you will make mistakes, and that's just how it is. But developing a habit of planning your trades, putting your limits where you say, you know what, here I accept that I am wrong and I'm not gonna, delay this. I'm just gonna cut it off. Cut your losses short, just like you cut bad things short in life, and do it. And then you've got to journal it. Okay, once again, we come to this journal thing. A lot of traders hate doing it, but all good traders, they journal themselves. Why did I make this mistake? What happened? Okay, if you don't evaluate yourself, you can't correct these things and you can't work on them. You got to, you got to see what you're constantly doing wrong, and then pick on it, and then say, you know what, I'm going to stop doing this. Just stop doing this. I'm going to work on this. I cannot stop my emotions, but I can kind of like get a habit of approaching to them differently. Okay, so if I constantly keep doing it, it's going to help me out. The other thing is pain. Human nature, we change according to the pain. So a lot of traders keep on with the same habit, and until they feel maximum pain, they keep repeating the same mistakes. But you've got to get out of that routine, otherwise you're going to crash your trading career. Okay. Let's go to the next one. Attention to detail. Now, this is structuring your trade. No matter what kind of trader you are, day trader, swing trader, investor, whatever, it doesn't matter. You have to have a structure, something that works for you consistently, which includes money management, risk reward calculations as well. You got to do these before you start trading, and then you can be precise in your trade size, which will be an acceptable amount of risk if things go bad in the trade. All right, so it's very important to kind of like make sure you got a structure around your trading. Includes your trading plan, your money management, your setups, and your journaling. It all needs to come together. If you do this with time and price, obviously then you're focusing on a certain day and hour, which is really kind of like being microscopic, like I'm like a microscope. I'm focusing on that specific time period, day, pricing, setup. So once the market gets into there, I can already look at the past to see if that's a relevant level or not. Does it match my technical analysis pricing or not? If I already can calculate these beforehand, I'm going to be approaching it in a more relaxed, structured way, and it's not going to give me a lot of room to make mistakes. Okay, so you won't be rushing the trade. So calculating time and price in advance is obviously strong structure. And always seeking improvement. Now, this is also very important. This is also being a part of the way that I look at things as well. You have to improve yourself. You can't just look at the market in one specific way and say, you know what, this is the only way I'm trading and that's it. Because the market conditions change. They trend, they go sideways, right? Three things the market can do. It's either going to go up, it's either going to go down, it's either going to go sideways. For all of these things, you need a different approach of trading. You can't just have one style of trading. This is why at the globaltrade.club, I've put into that trading coaching program 5-6 different ways of evaluating the market, because sometimes you look at the market and you have no idea what's going on. So in order to understand what's going on, you got to look at it from several different perspectives, and that's the whole idea. Look at it from different angles, and this is why learning a lot of things and ongoing learning, I call it continuous professional education from my finance background, because that's what we had. We had continuous professional education in finance as well, including the markets. You always have to see if you can add something in. And if I didn't have this CPE, this continuous professional education system already, embedded to me from my professional career, I would not have come up with timing and and pricing in advance timing. Who thinks about the swing days and the swing hours in advance, down to the hours? And even when I mention it now to a lot of people, they think it's crazy and they think it's undoable. And what can you do, right? We're doing it every day. I guess they got to see it to believe it. So make sure you're using multiple styles of technical analysis, which you have a good practical, hands-on understanding in terms of application and where you're going to use it. And once you got that understanding, then you got your price zones. Once you got your price zones, once you understand what the market is doing and what you're going to do under these conditions, then the rest is easy. You wait for the swing day and the swing hour because your pricing is already fixed up. By the way, with timing, you can use any kind of technical analysis you like. Whatever technical analysis you're using, which suits you or which you been doing consistently and works for you, you can keep doing it, not a problem, because the swing days, the swing hours, once you have them, they match what you do. Bingo, you go in. Obviously, always with proper money management. If you don't stay on top of your game, you are not going to be successful. The same is also true for me. When I started trading as well, it was a matter of constantly improving myself. This is why, again, we're coming back to journaling. What am I going to improve? I have to write out my trades. I've got to write down what I did so that I can say, oh, this thing that I did was wrong. And I see that in several trades. So this thing has to change, right? So if you don't journal yourself, you're not gonna know what to change, what to sharpen up in your toolbox. All right, so I hope this video helps. We all have to stay sharp. Actually, coaching for me is also staying on top of my game. I also recommend any one of you who is trading to teach your children, teach your family members, teach anyone who's interested, but especially your kids. Because children will need to know, with all the cryptocurrencies coming out, they'll need to know how the market prices goods and services. So understanding when it's a good price, understanding when it's a high price in anything they buy and will sell in the future as well is important. So stay on top of your game. These 6 principles are the most are the common characteristics of the very best of traders, according to research. Hope the video helped. Have a great day.